I just kind of burnt out from today's shenanigans. I got some football I'm playing later today, so not gonna have the energy to do it at 9 p.m. or later today. So we'll just crank it out here, get it done, and then can get off the charts finally for the day. I've been on them quite a while. So market review for today's price action, obviously kind of going down from bias down to entry and such. You got any questions from today's price action specifically, you can put them up in the chat. Otherwise, the public Q&A / market review for this week will be going on Sunday. I'll be gone on Friday and Saturday. So I had an expectation coming into the week that we were going to have some bearish price action. I was anticipating this to be the high of the week on Tuesday. Monday ran up nicely, ran up the previous weekly high, dropped down on Wednesday, Tuesday, Wednesday. Obviously, we didn't get any continuation. So coming into today's price action, seeing that obvious rejection off of the new week opening gap, and we had SMT down here on a higher time frame. To me, there's no indication that it wants to drop back down, right? It doesn't want to give me that retracement that I was anticipating for. So one of the most important things for bias is to stay flexible, is to not be concerned with being right or wrong, but simply looking at the price action and responding to what it's giving. If I was bearish on Sunday for the week, Monday played out nicely, Tuesday played out nicely, Wednesday played out nicely, and then Thursday, I'm flipping my bias for the week. And, you know, it's important to stay open-minded to potentially what you could be wrong on. So I was wrong for the weekly profile, and that's perfectly fine. We can flip our bias and look at the price action of what's showing up and get a nice trade as a result. So the 4-hour chart here, obviously you got that wick SMT at the bottom with ES, also with the previous weekly low down here, and then this kind of order block forming with a short-term inefficiency going into the price action today at 9:30. To me, that becomes that clear draw on liquidity. If it wants to continuously stay within the range, we're going to get something like this. So bias to me was bullish. I think it wasn't too hard to see that. I would assume that most people probably share that bias, so I don't have to explain it too much. On the 1-hour chart, let's look at midnight opening price. You've got an inefficiency there and a short-term discount. Right, inefficiency and discount of the dealing range between this high and this low. Looking for an IRL to ERL move from discount back to premium, framing the logic off there. We had 8:30 news today, so seeing if the 8:30 wants to form the low. If not, we expect 9:30 or 10 o'clock to do that same exact kind of move. So inefficiency there. Anytime you have an 8:30 news driver, you want to look for a 4-hour PD rate to be tagged. Anytime you have a meaningful move on the week, you want to see a 4-hour PD rate tagged. It's just part of the game. Whenever you have the weekly low form, that's going to be on a 4-hour PD rate. Whenever you have a weekly continuation move that's high quality, is going to be when you have the 4-hour, the 1-hour, and the 15-minute all lining up. Right? When you have the week, the day, and the session, and those respective ranges all pointing to one directional price movement. So today you have the 4-hour gap, you got the 1-hour gap, you got the 15-minute run-on stops. That's all going to play in nicely for today's price action. So for the session, you may be looking at the fact we didn't manipulate below midnight. Doesn't matter. All right, draw on liquidity over everything, over patterns, whatever. So when you open up, you see an inefficiency form and we're bullish, expected to drop into that inefficiency and then go towards buy side. But obviously at the session start, we still want to see some sort of ERL or IRL tagged. We got the IRL there, but as we know, during the kill zone, we want to see some sort of run-on stops or an inefficiency, especially if we can't see where the directional price movement is going. In this case, it's pretty obvious, but short-term swing low there on the 1-hour chart, 15-minute chart as well. You've got these relative equal lows coming to 9:30. Also an efficiency in here that you can refine down from the 1-hour chart. And then you got buy side up here as a short-term target. This is an ERL. This is also an ERL buy side up here. So in the morning, I was watching to see how we wanted to react to this gap coming into 9:30. We tagged the London high, started dropping down into the range, trying to see if we wanted to use this gap instead of the reclaimed. But coming into 9:30, we already were dropping heavily. So my second, the second spot of attention goes to the swing low. I don't want it to come back and tag this low. I don't want it to come out and run these lows, because if it was to do that, to me, it looks like it's going to come back into this consolidation, and don't want to be part of that. So 8:30 news today, you're looking at potentially 9:30 to the macro time for an entry. You got a nice run on stops right at 9:30, turtle soup. 5 minute, 1 minute looks pretty on par with what you're expecting. Run down there on the sell side. 1 minute chart, same kind of thing. You got, go back over here. Run on stops, short-term swing high being traded through. And now you have this dealing range between this swing high and this swing low. You have a gap in discount on the 5 minute chart that is used as this kind of continuation move coming into the session. I was not anticipating this on my personal trade that I took off stream. I got it in here at around 9:36. Took a partial on this swing high here, and then I got stopped in profit for the rest of the remaining 80% of my contracts, and then I rebought on this 1025 move, which is what I did on demo as well on stream. Which, did I post the stream recording from today yet? I did. Okay, I gotta post one from yesterday. I'll do that later today. On a 1 minute chart, beautiful super opportunity there at the lows. 9:30 comes down, finishes the market maker sell model, starts the market maker buy model. So right at 9:30, you see this run down. Look at all the candle bodies closing above that buy side. That's exactly what you want to see on a reversal signature. You got your first presentation gap here being inverted. So the trade that I took was, as soon as we had tagged the swing low and then closed above this first presentation gap, I got in here at 9:36. Could have been a bit better, I think, but stop was at the low. Partial there, as I was saying. But nice energetic run up. Starts holding some PD arrays, falls short of that PM session high, unfortunately, and then it causes this deep retracement back inside of the range into the 5 minute gap during silver bullet time. Starts to leave. You have a nice 1 minute SysD in here, and then re-entry opportunities after that during the macro time. In here, got some gaps that are being traded to 2, and then it runs the buy side from the current weekly high, and then it continues until noon, where it eventually kind of stalls out for the rest of the day's price action. You can see the time dynamics going on in here. 9:30 to 10 forming the low, 10:30 to 11 forming the high, entries at 9:30, entries during silver bullet as is displacing towards the target. I'll show you the demo trade that we took on stream today. This is from the markups. You can see it's pretty similar to what we were just doing. Entries and exits in there. So on a 15-second chart, buying off the SysD, buying off of a fair value gap on a 15-second, selling to at the PM session high, at this session / daily target, and then selling more at the -2, -2.5, and the buy side liquidity from the current weekly high right there. It's my last fill. And then it does continue up into noon. At that point, I was already out of the trade, out of the market, so I don't really care about missing this move here, 45 points, whatever. Something you just want to sit out of. I do expect price action tomorrow to continue to the upside. I'd favor that. In terms of targeting purposes, we do have this last manipulation leg here that you could argue on a 15-minute chart puts us up pretty far, but doesn't need to go up that high. On a 1-hour chart, you have this fulcrum in here, which does line up with that buy side. So I'm curious to see how tomorrow's price action plays out. But overall, I think today's price action compared to Tuesday, Wednesday, I think was pretty textbook, right? There's not much I think I got to go through that maybe is eye-opening for some, but I guess what you could look at is yesterday's price action and Wednesday or Tuesday's makes more sense now that you look at it, right? If the weekly bias is bullish and now on this day and on this session, actually on this day it was flat, on the session was bearish, you start to see this interlocking of this grid. Anytime you have that, you have more high resistance signatures consolidation, run on stops, things like that. And now this price action makes more sense, right? See the run on stops there, starts to drop down. No breakaway gaps are being formed, both on a higher time frame and lower time frame. So when you see this repeated run on stops here over and over again, and then it drops down, same thing you saw on Tuesday, right? Where it forms that high perfectly at 9:30, and then it comes back up and does the same thing we saw on Wednesday, where it tags a low, then it comes up during the macro time, run stops, very lethargically moving down, hits the low there. You see the same time dynamics going on here, but then it stalls out and just hovers around that midnight opening price. So now that price action from Tuesday and Wednesday makes way more sense when you look at Thursday's price action, given the fact that, okay, on both of those days, the session and maybe potentially the day was pointing away from that weekly draw. And now you're trying to trade in this part of that weekly bias compared to when everything is lining up and you got a very clear one-sided move. That's why you rely on the higher time frame. Because anytime you're just trying to trade the session draw or the daily draw, not in line with the weekly, you're going to get rougher price action like this compared to now here. Everything else is in line. You can use a very aggressive or conservative entry style, and you're going to get, for the most part, as long as you manage your stop properly, you're going to get filled out. So like I said, not terrible price action to kind of review. I think it's, for the most part, pretty textbook. Gap and discount, order block. I don't think the bias is kind of hard to look at for today. And obviously a nice expansion that follows. So like I said, for tomorrow, we have 10 a.m. news. If you do not have your Forex Factory set to orange folder, please do that. Please put it to red folder, orange folder, and gray. Gray will indicate the bank holidays, orange folder for any other news. Tomorrow, what you'll see is we have U of M consumer sentiment, which originally was a red folder news, and now it's an orange folder. So there's a decent amount of volatility that typically comes out with that. So I treat it like a red folder news driver. So we'll have to see how tomorrow's price action plays out. I don't really need to or really want to be trading tomorrow, to be completely honest. I'm already have taken a decent amount of setups this week. I think I've traded every single day this week. Monday, Tuesday, Wednesday, Thursday. Tiny win on Monday. Tuesday, Wednesday, both are stop in profit stopped. And Thursday today was basically the weekly goal hit. So tomorrow I really don't have any need to trade or really want to. If it's great, then I'll take something. If it doesn't look anything like this today, I'm demanding precision out of it. I'll be sitting out. All right. Can we go over taking partials specifically when it is not? Can we go over taking partials specifically when is it not with it as a scalper who's trying to make most of the daily range? Like, how do we take partials, or what to look for partials? Could you clarify it? Yo, Flux managed to take cashless longs today on days where we chop or we are slow. Is it still valid to hold till time like 10:30 only, or only if drawn liquidity is there to be taken? So 10:30 is the session kind of DOL for the session. That's like kind of as minimum, as long as the session is expanding, you normally want to see 10:30 hit. 10:30 to 11 o'clock forming that higher low of the session respectively. You will not see that on a swing to Z day. So we're talking strictly about New York Open reversal profiles and classic London protraction profiles, where the entire session is expanding and we're not in this weird choppy day or choppy week. So when price action is consolidating like that, I'll still love to try and shoot for 10:30 every day. And obviously a combination of both drawn liquidity and time. If it's not there, then I'm just going to be shooting for drawn liquidity. So on a low probability day, I'm focusing more on draw. On higher probability days, I'm focusing on a blend of both time and price. So that's why I'm comfortable getting in here, after we have this run on stops, and then it drops back into the range compared to other days where you see just stall out. I'm more comfortable shooting for higher and higher targets because of the fact that we have time on our side. So for the most part, you want to be looking for that session expansion. As long as the session is likely to expand, you're going to see it for an hour and forming that high and low of the range. 8:30 news days can be sometimes trickier because of the fact that 8:30 starts the engine. Then sometimes it only expands till 10 a.m. and then it falls short. But you don't expect that here because in this run up here at 10 a.m. forming the new daily high, it does not tag liquidity. Time is right, but price isn't. So in this case, it runs a higher time frame PD, right, in the form of this 15-minute buy side pool, and then it drops back into discount. We got a gap. We should also have an order block on a 5-minute chart. We have an order block here that we're trading into flux. Why are you marking out this order block here? Well, because of the fact that the breaker here did not have displacement through it. So we're looking at standard order block ranges that are going to create and be used after this displacement leg. This here, 1, 2, 3, 4, is the consecutive down closing candle range that would be used within this up movement. And also notice how there's a volume imbalance here. So when there's a volume imbalance present within this consecutive order block range, you're going to start pulling it from here instead of from up here. Right? So instead you refine that order block down to the volume imbalance plus the OB. And that's going to give you a more precise area of entry where you can see and here it's running into the gap, running into the order block. Also in discount of the dealing range at a key time. So then once it starts to form that 15-second displacement away, that's where I'm trying to get in. As soon as it wants to show me, okay, it's done retracing, I can start to get in pretty easily, I think, off of just 15-minute PD arrays, 15-second PD arrays, I mean. You got a gap in here, buying off of that, buying off of an immediate rebalance on the propulsion block. And then it just sends again, boom, boom. And then it takes out the target. So when price action is clean, it's pretty easy, I think. Maybe I'm saying that just because it's easier for me. I don't want to be rude, but this price action, obviously, when you compare it to this entire week and when you compare it to last week, this is easy, right? So if you're able to capitalize, if you're able to understand the price action that we've been having, even in June, I think June was difficult. This price action should be pretty easy for you. If you're new to it, it's still going to be kind of difficult, but I think it's much easier to see what's going on here in relation to a high probability day than, oh, this is here, but it didn't work. And this case, you were just scalping it here. This is a kind of textbook expansion day that you want to see once a week. And it will be there every week. All right. Doesn't look like Mr. Wade is in here. So when he comes back in a different stream, I'll answer that question. But taking partials, I mean, you could go in an hour about taking partials, but short-term 15-minute POIs at a minimum. Anytime I'm taking a partials, 15-minute POI in premium or discount on a time-based ERL or a gap in premium or discount. And then high prop days, it is partials are small, TP is big. On low prop days, partials are big, TP is small, meaning I'm trying to scale out of my position faster on a low probability day than I am on a high probability day. And then partials are on pretty consistent levels, always just taking it on where that session high or low could be targeting. So on today's stream, I'd marked out what these targets would be. This swing high would be a session target, meaning we'd form the new high of the session on a 15-minute draw on liquidity at a key time. So that would be the session target. This PM session ERL could be used as both a session or daily target, as it's an ERL in premium. And this up here is that current weekly high. That could be used as a weekly, daily, or session draw on liquidity. Preferably a daily or session, as I think that tomorrow is going to expand higher a little bit at least. So anyways, like I said, I wanted to keep this short. I don't got a whole bunch of mental capital left today. I'm mentally tired, so I can't really think of any high quality gems to spit out right now. So this is recorded. If you want to go back in and watch it, I'll post it up on YouTube vids as usual. What's up, BM? How you doing? I gotta post the recording from yesterday as well. So I'll do that one. This one, I think I got 1 or 2 recordings to send out as well. And then if you're in the PDF group, pull up the PDF gems, and you'll see there's a little mini lecture in there about souping, and how to refine down levels and such. So it's like a 10-minute video if you want to watch that. I love it. First nutty performance. You just got to keep it up. Don't overtrade. This is your entire weekly goal, right? You can do this once a week and you're done with work. I don't want to have to be working 5 days a week. Give me my 30 minutes of work and I'm off. You know, that's everyone. You got into trading. I'm talking to everyone here. You got into trading for the freedom of it. So don't sit in the charts from 8 a.m. till 1 p.m. Right? Get in. If you don't like it, leave. You have to have an abundance mindset. As soon as you think that there's a lack of setups or there's a scarcity of setups, you're gonna force something stupid, or you're gonna overtrade. There's an abundance of these high quality setups. You know, this weekly move will happen obviously once a week. There'll be something quality like this, and even if you know this is gonna happen, you look at Tuesday, you look at Wednesday, you look at Monday. All those days are cleaner than they probably should be coming into this week, but offering a bountiful and plenty of setups to take. Right, so operate on an abundance mindset, and then your work in trading becomes patience. Your work in trading is outside of the charts, to be completely honest. Trading itself is, you know, when you know what you're looking for, it's not too hard. But the trading work that you're doing, you feel like you're not doing any work if you trade 30 minutes. That's not true, because everything that you're doing outside of that, you know, the patience, the mental warfare, the mental capital management, your work as a trader is outside of the charts. It's both in your head, and it's the time when the chart is closed where you maybe have to exercise some discipline, and patience for the highest quality setups, right? Anyways, so I'm going to post this soon. By the end of today, it'll be up. If you got any questions, you can shoot me a DM. And the market review / public Q&A for all the questions, we'll get all those answered, will be on Sunday. All right. People in the private group, there will not be any stream tomorrow. So yeah, what's up, Dean? So there won't be any stream or market review from now until Sunday. Sometimes price went extremely bullish and we don't get discount retracements. When that happens, take care, Yum. Good night. When that happened, what is the preferred protocol? Waiting the retracement of the main dealing range of the session? Wait, price. I mean, that'll happen when you have, like, say you have a breaker or something, a breaker or a mitigation block, then you're not going to see a discount retracement. You know, it's just going to be extremely strong and continue up. So you have to find either a continuation move with an order block or like a mini gap retracement, kind of like what you see over here, or the 1050 macro, very shallow retracement back inside the range. You're gonna find a continuation move like this, or you're simply just not going to get an entry. If your main entry is only a retracement style, then you're simply not going to get one. But you can know when that happens based on the presence of the breaker or not. If the breaker's there, you expect the breaker to hold. If the breaker's not there, then you expect it to retrace back into a short-term discount. So that's the protocol. No, that's not really the reason why. So did price come back to discount because we had move up after 943 without any retracements? In this case, we didn't have a breaker, so that's why we expect discount. It's not the first one. You know, it doesn't have to offer that retracement there, because technically this is the retracement, right? This right in here is the retracement. On a higher time frame, it's dropping back into discount, running stops. So what should it do? It should probably expand. It doesn't need to offer discount after that because it's already met the requirements there. That's the way I look at it, at least. The breaker instead did not have displacement through it. So if the breaker's not there and we don't have, you know, we don't have that validation of the breaker, then we're looking for a retracement. In this case, the entire dealing range was between here and here. So, yeah, that's where we'd look for it to drop. Now, I would have liked if it had ran out the PM session high first and then dropped into discount, but now you can see premium ELRL here, right? Short-term buy side runs that, comes back into discount, trades back up. So that's this is, because that the reasoning there is, if every single time we don't see a discount retracement, then we're expecting one that's not true, right? You want something that's repeatable. So the repeating logic there is, we offer discount here, we ran out a premium array, and since the breaker wasn't validated, we got to come back and offer re-entry. In this case, it wouldn't be, because it wouldn't hold this upper portion. It would come back into discount with the order block and the fair value gap on the 5-minute chart, and then as it starts to displace away, you can get in more, or again, if you got stopped out like I did. Of course, anytime. So make sure you journal today. If you haven't already, make sure you review if this price action was difficult for you. And best of luck to you tomorrow if you decide to take a setup and it is within your model, of course. So I'll see you guys on Sunday. So have a blessed weekend till then. And I'll talk to you guys very, very soon. Peace.